Good afternoon, ladies and gentlemen. It is a pleasure welcoming you all to our webinar, Harnessing the Digital Technologies for Finance Function. Today's deliberations will revolve around the need and the impact of technology for the finance function, including the benefits of the recently adopted technologies or any challenges faced. And the speakers will also share their practical experiences in the digitalization journey. Before we begin, I would like to give a brief about ASA and our speakers today. We are a 3-decade-old accounting and consulting firm with over 1,000 professionals spread across 8 offices in India, besides a well-oiled network of national and international affiliations. We work with our clients, many from overseas, to help them set up offices and factories in India, find partners, take care of their audit, taxation, accounting, and business support requirements, GST advisory, risk advisory services, and also help them with restructuring and liquidations as well. Our esteemed speakers for today are Shakuntala Rao, who will be the moderator for the session. With over 34 years of experience in the field of finance, she has achieved great success in transforming the finance function. She has worked with reputed organizations such as PwC, KPMG, IBM, and Infosys. Additionally, she is a member of Mensa, the High IQ Society, and holds many qualifications, including being a chartered accountant and CIMA and MBA from UK, and is currently pursuing a doctorate in the adoption of blockchain in supply chain financing. To top it off, she is a gold medalist both at graduation as well as CA level. We then have GS Venkatraman, who is CFO, Maverick Systems. Venkat is an MBA Finance and holds a certificate in Advanced Corporate Finance from IIM Ahmedabad. As CFO of Maverick Systems, he leads the finance function, including treasury, secretarial, and compliance, and plays a critical role in the areas of investment planning and creating and administering wealth sharing initiatives of the company. He has also worked in senior roles in Mindtree, Subex, Accenture, and Wipro in the past. He holds accolades of being recognized amongst the top 100 CFOs for 2021 by CFO India and is part of the CII Economic Affairs Committee. Our next panelist, Pinky Mehta, who is the CFO of Aditya Birla Capital. Pinky is a qualified chartered accountant with over 32 years of diversified experience. She joined the Aditya Birla Group in '91 to become the first woman officer at that level in the group. As a key member of the finance team for about 2 decades, she's handled many portfolios and made major contributions in the areas of taxation, MIS accounts, legal, secretarial. She has played an active role in the demergers, mergers, and acquisitions of the group since '98. Pinky has handled many complicated tax issues too and has mastered the intricacies of tax laws. She has been honored with awards such as the Chairman's Award for Exceptional Contributor in 2008, the CA CFO Women Award by the Institute of Chartered Accountants in 2016, and the Finance Leader of the Year Award in 2020 from ET Prime. Then we have Sid Banerjee, who is the CEO of SG Analytics. Sid has over 3 decades of diverse experience in growing successful businesses. Having started his career at ITC Limited, Sid has led IHS Markit as CEO and Credit Suisse and Deutsche Bank as the managing director. Very recently, Sid was part of the advisory board at Bridge I2I Solutions, which was acquired by Accenture in November 21. Sid brings in a diversity of thought and action to help broaden the company's horizon for engaging with constituencies and stakeholders outside of its conventional reality. And last but not the least, we have Sandeep Gupta, who is a partner in our accounting and business support practice. Sandeep heads the accounting and business support and indirect tax services in the Delhi NCR. He has an expertise in accounting, tax, business process re-engineering, global treasury, cross-border M&As, and financial planning and analysis. He initiated the indirect tax practice and has authored many articles. He is a prolific speaker on India's fiscal budget, GST, and other regulatory issues. Before we begin with this engaging session, a few pointers for this webinar. Please note that all the participants will be in listen to only mode throughout the webinar. If you have any questions or comments, please feel free to put them in the questions section in the chat box. We will be emailing a link with the recording of this webinar tomorrow. Thank you, everyone, and over to you, Shakuntala.
Thank you. So let's start this session, and we hope everybody in the audience really gets a taste of the experience of all these panelists, and learns a lot about the finance function and its transformation. So I want to start with you, Pinky. So what are, as a CFO, what are your imperatives? Is it cost alone? Is it something else? Has it changed recently? Can you tell us something about them?
It's a very good question, Shakuntala. The thing is that I'm the holding company of the financial service business of the group. And I've got a diversified business. I have got life insurance, I've got NBFC, I've got life housing, then I've got the asset management company, broking, insurance broking, ARC. So my first priority is that, see, the resources are very limited, capital. So capital allocation strategy is the biggest challenge for me, because everybody wants to grow. Everybody wants to grow and everybody wants money from the parent company, So with the limited capital available to me, that to give the money to whom, where I can get the maximum benefit, it increases my ROI, return on my equity. So that's a big challenge for me, and to take part in the overall business strategy, that whatever the growth plans are there, it should fit into my overall strategy, what I have for my financial service business. So that is my first priority. Second is the compliance, because the thing is that all my businesses are regulated entities, be it is SEBI, be it is RDA, be it is RBI, then the national housing, then I have a PFRD pension. The thing is that, so how to comply, and have a compliance and to have a total risk management, that is the biggest, because every now and then, I think we come out with so many kind of a consultancy papers, so many kind of the amendments and all these things. So how to keep, aware of on the top of it, and how, you can fast move, to comply with all these things. So compliance, risk management, governance, capital allocation strategy on the top of it. I think the corona has taught us, that how you are ahead of the, curve in case of a digitizations, because we have digitized. I think everybody, my, the co-panel people also will, confirm to me that when this corona was there, we have not come to the office, but we have done all my quarters results, which was done online, satisfying the auditors with all the vouchers and all these things online. Nobody has visited office and given them the, the physical copy of all the vouchers or the books of accounts or the invoice or anything. Everything was done online. So that has taught us that I think digitization has played a very important role in the finance functions, where we could conduct our board meeting on also on time. We could, give all the satisfactory, the vouchers or the authentications of the documents, what was required by the auditors and all the stakeholders. So that is on the end, how the cost benefit analysis for this year.
Okay, that's lovely. So, you're saying that because of COVID, your, emphasis on digitization has really increased, though obviously your other priorities of capital allocation and compliance continue, especially in your industry. So, Venkat, would you like to add to that as a CFO as well?
Yes, sure. I think, as you know, Maverick is a software services company, and we are focused on providing software services to banking and financial services customers. So I think in my case, the priorities are slightly different. I think because we are not listed, we are a privately held company, but we've been growing rapidly. We've been growing 20% CAGR for the last 3-4 years. So given our growth ambitions and the way the company is looking to grow further and expand, there is obviously focus around what do we do, at what point in time do we do a capital raise, and if you do a capital raise, how will that capital raise happen? Will it be a combination of a private equity coming in and then later on an IPO, or is it a direct IPO, or is it a combination of some hybrid funds coming in and then we look to use that capital for growth? So those are the key priorities which I'm dealing with. Of course, apart from that, in terms of how do we support the strategies of the company in terms of growth, how do we expand into newer markets where we are not present today. And of course, I think it's never either or, right? It's growth and profitability. It's never only growth or only profitability. So how do you kind of combine growth and profitability and do that in a manner which is together? And the fact that we're scaling and growing rapidly, how do we kind of have the finance function scale and manage internal systems which helps us scale efficiently, and how do we leverage digital technologies for that scaling is one other aspect we are working on. And that's where I think maybe we'll talk about some of the things we are doing today and what are the new things we're looking to do as well.
Okay. Has COVID impacted your imperatives in any way other than digitalization that Pinky mentioned?
Yeah, I think, see, in our business, you see, since it's a very people-intensive business, and the fact that until COVID hit us, everybody was used to coming to office 5 days a week, and software development work used to happen when teams come together only, versus now a model where companies are looking at a hybrid model or continue to work on the remote model. I think that's been a significant change. So I think a lot of our decisions from a finance or a capital allocation has also changed. For example, if you look at the software business, every growth has to be supported by physical infrastructure capacity you create, right? In terms of if you're growing rapidly, how do you plan for infrastructure being available and available on time is something which you normally keep dealing with. But now with this change in the model and the fact that we are also looking at a hybrid model, some of our those decisions have also been fine-tuned. So to the extent you're right, I think COVID has definitely changed things from a business as it used to be versus where we see it today. And of course, I think the way of working, be it in terms of how you do close of accounts, how people used to submit expenses, I think they're completely moved, right? As Pinky was mentioning, you don't look at physical documents. Everybody is able to upload and you're able to process it real time, and nobody needs to really come anywhere to get a claim processed or an expense cleared. So I think there has been change, and I think it's for the better.
Okay, that's good. So Sandeep, do you want to add anything, particularly because you do work not only for yourself, but for several other clients as well? About what are the finance function or the CFO's imperatives?
Yeah, I mean, as Pinky and Venkat have said, these are definitely very, very key imperatives which are necessary for a CFO to look after. But in my experience, to add on, is COVID certainly has had a very, very significant impact. If organizations were adapting to technology in the joggers lane, I think they have been pushed into the Formula F1 race now to adapt to technology as fast as they can. But just to add on in terms of the macro concepts, what the organizations also look at, and especially from a CFO's perspective, they are looking at technology which makes them more agile and which can be scalable, because today's businesses, with the growing environment and the rapidly shrinking borders across the world, the scalability and agility is most important, and that's what the CFOs are concentrating more in terms of choosing the right technology fit for their organization.
Right. Very good point. So Venkat, back to you. So, to actually cater to the CFO imperatives that all of you mentioned, what kind of technologies have you deployed in the finance function? And what have been the benefits of these technologies, and how do you measure those benefits? Really, if you could talk about specific examples and specific technologies.
Sure. I think, see, the key from a finance function perspective is, given our specifics of the business, I'll try and focus from a software services perspective, although I'm sure there are many other examples from different industries. I think two things, right? I think if you look at a software services business, because it is a people-intensive business and there's a lot of employee engagement and a lot of travel which happens, a lot of expenses, a lot of people-related touch points. So you look at how do we kind of make that whole experience completely digital and efficient, right? So as many of the initiatives we have rolled out are looking at RPAs and automation around, let's say, expense processing or processing of our vendor invoices, or the whole payroll experience in terms of a complete process, right from the time you onboard an employee to the time you process salary or to the time somebody exits. I think there are a number of touch points across that, right? If you were to look at a employee onboarding, from the time the employee is onboarded, there's background checks, and once the background check is complete, the employee joins, and then you process payroll, and then there is exits, and then all of them have a number of physical touch points, and then there is also a lot of it which can be done digitally. So we have looked at these areas and identified how do you look at solutions where you can use RPA in terms of wherever there are processes which are repeatable, which are something which can be automated, is what we have chosen to focus on. Some of these are work in progress. For example, I think if you look at expense reimbursements or travel related claims, I think those are all more easier to pick and automate, because I think a number of solutions exist and you can kind of pick them and use it. In our context, we have since we're also a software services company, we're able to do some of it in-house, but there are a number of solutions which can be done, which are available off the shelf, which can be used for some of these solutions. And I think the other area where I think I'm focusing on particularly is in terms of how do we kind of use predictive analytical solutions which can help us from running the business more efficiently, right? So it could be things around forecasting of revenue, forecasting of your margins, and how do you kind of get diverse data to do that? See, typically what happens when you look at any of these models, of course, there is enough data available with the finance function, and you can always run some models and spreadsheets to do some modeling around your forecast, and you can kind of fine tune that with experience. But I think what technology has allowed you to do is fetch disparate data and make them available in one place. For example, data lake solutions are something which is very common, right? I think as companies become larger and you have multiple systems which feed into way a business works, how do you kind of fetch all this information and keep it in one place and then leverage that to use and run analytics solutions? So I think
so what do you use? Right. What technology do you use for that specifically?
See, the technology is the choice of the specific organization. So we have used, for example, a data lake solution which runs to do these analytics. But see, I wouldn't necessarily be overly worried about which technology. I think it's very company specific in terms of what you want to choose. But in our case, we have been able to use the data lake solution which we have, which also has analytical solutions on top of it, which we are able to use and then use it to build our forecasting solution needs.
Okay, so how do you measure these benefits? What benefits did you derive, first of all, in anything, in your travel and expense controls or in your business analytics for your thing? What kind of benefits have you seen, and how do you really measure those benefits?
Yeah, I think good point. I think, see, if you look at some of these transaction intensive ones, I think it's far easier to measure, because you will have metrics to say, okay, I was able to do that in, let's say, X number of days earlier, where a physical process used to work, somebody used to submit, I used to process the claim, let's say, in 1 week's time or 10 days time, versus now you can kind of cut down the entire cycle and you can do multiple cycles. See, typically, if you look at finance functions, most organizations will have defined days in which they will process their expenses, pay their employees or vendors. You can now change that. For example, you could choose to do it every 2 days or twice a week or thrice a week. So the whole processing time and turnaround times can be much faster. So that's one way of measuring efficiency. In terms of investments, I think, see, wherever you're making external investments, you're making investments in a tool and then looking to get benefits. For example, if you look at the data lake solutions we have made, there is a quantum of investment we're making. So how do you measure the returns on such? Then it becomes a little more complex, because then you're saying, okay, I'm making investments in physical infrastructure and there is software, and therefore how do you assess what is the business benefits you're getting? So on one side, you have your forecasting, right? If you're running a forecasting model, it was running at, let's say, 85%, 90% accuracy, and now you're able to move it to, let's say, 95, 97% accuracy. I think that's a business benefit you've got. And then whatever investments you've made, I think that's a call in terms of how do you want to recover that investment. Is it a point in time measure? You will say that, okay, I need the recovery in 1 year, or will I recover it over 2 years? I think that's something we will need to iteratively evolve. In our case, we have kind of taken a little long-term view. We have said that we will not rush to say that I need this returns in 1 year. We said that we will look at it over a 2-year period and see what kind of returns you're getting. But I think the way to measure it is, what are the business outcomes you're able to generate? Are you able to generate business outcomes which gives confidence to the business, saying that if I am making a forecast or I'm forecasting it to the board, I can tell with confidence that my forecast will be at a 95% accuracy or a 98% accuracy, and then you stick to it, right? I think then that kind of makes it better.
Right. So Sid, do you want to come in here and talk about the kind of technology that you are seeing currently in the finance function and what kind of benefits it's been driving and how do you measure it?
Sure. Good afternoon, everyone, and always difficult to go last in a panel, but I will try. I'm also slightly conflicted because I have been a finance person most of my life, and at least for the first 2 decades of my career, and the last 10 years I've been more as a technology CEO person. So I'll try to sum up some of these conversations to say, as a finance lead, and I think Pinky alluded to it, it's typically 3 aspects that people look at. It's financial, regulatory, and reputational aspects. And in this, increasingly, I'm now seeing a 4th dimension added, which is around sustainability. So in these 4 aspects is where mostly CFOs spend their time. And I have seen use of technology in all 4. I've also seen both the good and the bad of it, right? And I will try and give you examples of both just to make sure that we understand how sometimes just deploying technology is not a silver bullet and it doesn't always solve problems. The usual suspects on the financial aspects, which I've seen, is mostly people are using a lot of dynamic dashboarding, augmented data management, supply chain orchestration, inventory tracking, this sort of areas. I do see on the reputational aspect a lot of bots being used in terms of credit risk modeling, market risk modeling aspects. And I also see in terms of regulatory aspects, usage of NLP and NLG in terms of, producing reports. And again, bots over there to do some standardized reports churning out. I must confess that still people confuse analysis with analytics in this industry. And a lot of work that we think is analytics is primarily restricted to a lot of BI type dashboard work that people do. It's, much lesser than the real power of analytics that you could use. And therefore, the right advice to come in before one launches into any of these projects, I think is very helpful to running a proper discovery workshop, understanding where you could, deploy technology, what technology is a good fit, where is it an overkill, and also sometimes, especially large organizations, when we deploy a tool, we think it will solve our problem, but invariably after you deploy a tool, you need to then bring in experts to actually get the kind of output that will be, fit for purpose. So this is a mix of stuff. I just want to table it for you, Shakuntala, just to let the audience know that there is multiple nuances in deploying technology in this space. And finally, on the sustainability, since I raised it, I'm increasingly seeing now a trend of people trying to find out the ESG rating of their vendors, basis which they actually would give more or less of the business. I'm also seeing a lot of trend in collecting data, which a lot of it comes from data as a service type platform. And some sort of work also around fair AI. Even people deploy AI models, but they now want to understand whether it's a fair AI model or not. So in a nutshell, that's what I would say is what's happening in the space.
Okay, that's useful. Thank you, Sid. Sandeep, coming to you. Sid alluded to some of the issues or challenges, and it's not necessarily, something like technology for technology's sake. What are the kind of issues and challenges that you see when people deploy technology in the finance function?
Yes, that's I would say an extremely important facet of imbibing technology anywhere, because with any technology, it will come with its own set of challenges. But typically, if we were to talk about pure play of challenges, there are those traditional ones, and then there are those new age ones. The traditional ones being obviously change management is the biggest issue, which I have seen across my more than 3 decades of practice life.
Right.
The biggest is not just the resistance to change, which is one aspect of change management. Obviously, nobody likes to be drawn out of their comfort zone and be made to learn new things as technology develops. But more than that, there is also the aspect of organizational culture, whether there is a culture of imbibing technology, adopting technology or not. Is it a top-driven approach when high-level technology is being brought down? Is the senior management level involved, or is it being pushed down the throat of the middle management or the lower management people? Those are the broad aspects of change management, which work. They still have a play today. The second set I have seen most prominent is the absence of a very well identified requirement definition when you are looking at technology. You know, the wish seems to be enormous. It seems to be never ending, and it seems to be developing as the discussions with the vendors keep on happening. So I have seen use cases where even while the SOW has been finalized, the new set of requirements still keeps on coming up. And why is that? One aspect which I have zeroed down upon is that most of the people the technology to adapt to them and not vice versa. They don't want to adapt to technology, but they want technology to adapt to their vision. Which means then the challenge comes in that the technological interface has to be customized and it has to be configured according to the needs, and that's where one of the biggest challenges keep popping up. That any kind of a configuration systemic change which is required that could throw the whole platform off the gear. But other than this, Venkat talked about ROI. So measurement of ROI is a big. While everybody feels that every adaptation of technology should be a measurable ROI, there may not be a case. There may not be a tangible benefit out of it. Sid mentioned about the reputational part, the other intangible part of those benefits. But measurement of ROI, if the management or the stakeholders are only focused looking at ROI as a pure play, they might just try to dissuade either the use of technology or them shut it out of the window that after a few years no, it's not beneficial for us. But the new age challenges which I'm seeing is one of them has been touched upon by one of the panelists. The regulatory challenges are now coming in. Data privacy is gaining enormous ground. India is coming out with its own data protection bill. Well, we wonder when we see the light of the day, but sooner or later it will. But again, with the cross-border transaction, the GDPR issues, all those things are coming challenge, and most of the whenever any organization is going on for technology, this is something which they miss out on. And the last one I would like to comment upon is the security part, the cyber security part. With technology, you open up your doors to your data, to your sensitive, confidential, private information. I think whenever any organization goes of talking of technology into any process function, making sure the security is tight enough not to lose sight of their confidential data or their secrets, the business secrets. The essential investment into security, firewalls, protections is definitely an integral aspect of technology.
Right. So how do you overcome these challenges? Pinky, would you want to pitch in? So if you look at change management or as an issue, or security as an issue, or ROI as an issue, how would you overcome these challenges?
Yeah, I think as Sandeep mentioned, sometimes organizations have to have realistic expectations of some of these digital initiatives you're rolling out, right? I think many times as you was kind of articulating that, say, I think you have a new system being rolled out, so you want possibly everything you couldn't do over the years in one go to be addressed by the system. So I think it's important to have realistic expectation and have a phased approach to some of these things. It's not necessary that every single thing you have in mind has to be addressed in one single go with a rollout you're looking to do.
So you have a minimum viable product and then go on from there.
Or a phase one which will achieve a set of objectives, and then you see that result and then you move forward. So that kind of helps in two ways. One, you kind of see some wins and you're able to appreciate the benefits of the technology, and also helps in change and adoption, because many times it is not just the technology, right? Because if you just force fit your existing process onto and try and digitize, you may not necessarily get any benefits of the new solution which is coming on board. So therefore, if you're able to kind of relook at or reimagine your existing process as well, and then push some of these digitization initiatives, it will give you those benefits. Two, I think sometimes some of these newer technologies, right? At least I can tell you from past experience, like for example, if you're building a conversational bot for something which has got a lot of traction and a lot of inquiries come, and instead of somebody answering, you're building a conversational bot. These conversational bots take time to learn and respond to queries which come their way. So although the natural expectation is the response should be as human as you would expect, as you would like another side human responding, some of these bots do take time, and you can very easily lose heart because some of these early rollouts will be so bad and user feedback can be very disheartening that you would want to kind of junk it and move forward with something else. Whereas the key is to say, okay, what is my key objective out of this rollout, and then how do I keep adding and building on top of it? So I think both of these things work well.
Yeah. Quick wins, quick wins. Yeah,
and
that's true.
Because sometimes some of these fancy technologies will kind of build expectations to such a level that people will think magically that I ask a question, every single possible thing which is not in my mind is also answered, not necessarily what I ask.
Yeah, that's true. That's true. So coming to new technologies, so what do you think, looking at your crystal ball, Sid, what do you think will be the technology that the finance function will start leveraging as we go forward? Will it be the metaverse, ChatGPT, blockchain, more of cloud, more of mobility? What do you predict?
Each of those that you mentioned has two schools of thought in terms of, benefits as well as perils, and they are getting adopted. But I think, to be fair, my assessment has always been, I work mostly with banks, and banks have always been the last adopters of technology, and within functions I've seen finance is typically, again, not the most progressive when it comes to looking at new technology.
The CFOs may not agree though.
They may not, but that is true. Invariably, sales and marketing I've seen are much more open, and it's also because they are more top line driven and bottom line driven, and probably that's where it goes. But I think more than looking at any one technology, what I have seen is the real power, and I think points that both Pinky and Venkat alluded to in terms of benefits come in when you deploy the right mix of technology. So I can give you an example of what we did for an Australian bank. They operate in Australia, but they work in all of Southeast Asia, which means they had to deal with multiple regulators, and each regulator have slightly different tweaks in terms of the reporting that you have to do, whether monthly or quarterly. And I'm sure with my Indian colleagues, the same thing would apply, depending on the different types of regulators you have to address too. So they had the source of data coming from various sources. They had an ERP system, they had an FP&A system, they had an Excel file coming. Sometimes some data would come from an email, and to aggregate all of that data into one platform needed not just able to build standard APIs, but also to be able to read unstructured data, which is from, let's say, email kind of stuff that comes, and bringing it into a platform, that then govern that data, flatten out that data, and then kind of push it into the different formats that the regulators are given, where a lot of NLG type of tools were deployed to, almost 80 to 90% of the reports actually got automated and done. And then you could have even built a cockpit to the final users to say, this is the kind of dashboard these reports are going to, look like, and then the state of readiness, which kind of brought in various types of tools, but we could deliver, to your point earlier, what sort of savings, more than 30% savings in the headcount that was working, apart from the cycle time, of course. So it wasn't the most exotic use of technology, but it was, trying to think through the whole problem and bring in the right sort of people onto the table to do it. Needed a lot of collaboration internally, running a discovery workshop and then deploying it. So I think the power of many of these things will be in terms of, getting the right people in the room and then putting in the right tech, not necessarily doing it. And the flip side of the story is, in an accounts payable shop, I have seen people deploy OCR tools. And you would expect that, bills and everything, it will read it. Believe you me, that actually added up more than 1.5 times of the original team. Because what it was thought was the OCR tool, which is typically 60 to 70% efficient, was
Right.
reading the data 60 to 70% correct. Now, but mind you,
Right.
the processor had to look at this data ab initio because they were not sure which 60% of the data has come through. And they were also not sure of the 60% data that's come through, which one is accurately picked up and which is not. So it was actually doubling their work. And I've seen so many cases of even bot implementation, where before the bot implementation, people promised a 20 to 30% saving, and at the end of it, people found they added more people to do the work.
Right.
So, you have both stories depending on how and where you deploy technology. So I just thought I'll add some perspective here.
So,
Sandeep,
so I would like to add to what Sid said, that there cannot be a one solution or a technology. It needs to be a mix of technology. See, the thing is that as an imperative, I would feel that there should be a single source of truth across the organizations. There should not be a multiple, data which has been running through, and then you struggle, to match the data across the various functions. Then transparency. One is that the quick decision making and the real-time availability of the data. So the thing is that I should be able to take the right decisions, take the corrective actions also on time, if all the data are available on a real-time basis. So I think a few of the things, these are my, what I say, these are my imperatives, which will tell me that which kind of, if the things are getting monotonous or it's a common, then I would better, have a, the robot or the RPA kind of a thing, where the TPS and all these things, your salaries and all these things. So I think the different technology, depending upon what kind of the advantage you are going to get it, looking at the cost benefit analysis. And the thing is that I need a single source of truth. I don't want that the multiple things are running everywhere. You struggle for matching of the data and all these things. Everybody should have data on which I'm talking, instead of wasting time in struggling to match the data.
Yeah, so I'm doing something in blockchain. So blockchain is supposedly going to give you a single source of truth and data across all people, though of course the technology is not yet mature enough to do that. So Sandeep, what are you seeing in the new technology space with all your clients? Have they adopted cloud? Have all of them got onto it? Are they using mobility extensively? What are you really seeing?
Goes without saying, Shakuntala, mobility, as I said, COVID has catapulted the entire aspect of mobility. Most of the organizations we work with have moved on to cloud. We have moved on to cloud as an organization ourselves completely. We do not have on-prem servers anymore. Now that what is on the table is not just mobility, but a lot of other factors. When you have on-premises servers of your own, the entire responsibility of not just maintenance but backups, taking care of disaster recovery policies, business continuity planning in cases of crashes, all those are your own. But when you move on to the cloud, in most of the cases, it is theoretical. 99.9% of uptime is assured by most of these cloud server providers. The technology is robust. The security is very robust. At the same point of time, the advantage which most organizations are getting, their investments are getting reduced because of the need for computing power to pay as you use has now come into picture. You don't need to invest in computing technology and servers from day one. You can leverage it only for those 1 hour or 2 hours when you need it. So cloud and mobility definitely are on the table, and without that, I don't feel any organization can grow at a rapid pace in the coming future.
True. So Venkat, do you as a CFO do things on your phone? So for example, do you read reports on the phone? Do you do approvals on the phone? And has this increased post-COVID, or was it always like that? Or
yeah, I'll come to that. I just wanted to add one point on Sandeep's adoption of cloud. I think there is an interesting angle which finance function and CFO should think about. I think as more and more companies adopt cloud, and cloud not only for the finance function, even for the business, I think what happens is, while cloud usage of cloud and adopting cloud is very, very good and kind of gives you a lot of flexibility and security, it also is a mechanism for your cost spiraling very, very quickly, because all of these providers, be it an Azure or a AWS or any of those, can very quickly, your costs, you will not even know that suddenly you're running millions of dollars of costs based on, because all of these guys are extremely good in terms of suggesting what you should do. And some of these are fairly powerful processors, and the moment you keep increasing it, your costs go up. So a need for a very different kind of finance function folks will also start coming in. I think many organizations are already doing. So there are cloud operations folks who are embedded from the finance side, who start monitoring these costs and give the visibility to the organization of what we are incurring and where do we need to optimize. Because it is, while the first wave was adoption, I think a lot of organizations have already crossed that path. The next wave is efficiency in terms of how do you use it and use it efficiently. I think so that's a point to keep in mind, and because very quickly you will realize that you're driving a lot of costs, and it is no more capex, but it's all opex, which is suddenly hitting your P&L, right? So that's one thing to keep in mind. I think the second question you asked, yes, I think if you look at what I do on phones, I think of course a lot of approvals, particularly bank approvals, authorizations and all, they're able to do on phone, because I think banks have also moved, and it's no more that you need to sit in front of a computer and approve payments. I think there are a lot of apps which you can do, which is equally secure with multi-level authentication which come in, and you're able to do that. So a lot of approvals do happen. Dashboards, yes, but I think still the question of, I think we are also a little old school, right? You want to see it in a bigger screen and be able to get information. But yes, some key dashboards definitely, because if there are some of those 4 or 5 data points you want to see quickly and you get a sense of what it is, then it's easier to see it on a phone and you're able to manage. But I think mobility solutions are there. But I think where I see a lot more adoption is, I think organizations just got a lot of sales folks who need to, let's say, submit their reports or submit expenses. I think there are a number of solutions now available where you can just click a picture of your expense and then kind of scans and uploads it onto the central system. So some of those kind of solutions have evolved, and a lot of companies have started adopting it. Or even CRMs, right? CRM usage. I think a standard problem which most organizations have is sales guys don't update their CRM in terms of the kind of conversations they're having. So now with all the latest CRM solutions having mobility options, it makes it that much easier for people to update, and not an excuse to say that I don't have access, right? So I think both of that kind of helps.
True, very true. Very true. So before we wind up this part of the panel discussion, Pinky, coming back to your point, where you said COVID has actually driven more digitalization, in your opinion. What digitalization? Can you give me some examples?
So the thing is that we have deployed this Power BI, and this is a dashboard. So in the sense that earlier I used to ask my CEO that what kind of, the volume you did, how much is a premium you collected, how much is a loan you did it, in the 1 month of time or on the previous day, and all these things. So now everything I do it on Power BI, so I don't have to ask anybody. I can even run on my laptop. I can do it on my mobile also. So I know even the brand wise, what are the sales which has been done. I know all the key metrics, everything has been available. The other thing is this vendor management, that everything is online. So, and spend management. So in my case, you understand that I got a multi businesses. Few are very large businesses, few are small businesses, So the smaller fish has to get the pie of the discount what the large businesses are doing. So spend analytics is one thing. We come to know that which are, so then what we have done, that we can go to that vendor. We said you are quoting an X price to one company who is getting a large buy, and you are quoting in my group to a smaller company the Y price, because he's buying less. So that we have, so I think that has given us a tremendous cost reductions, because that we could look at this whole, spend analytics from the platform itself, that how much is a spend which we are going to do with each vendor, how much I'm spending with each vendor, and all these things. So that is a big advantage. Got it. The other is there's that I don't have to ask my CFOs or any of the CEOs that what kind of business is there, how much is a loan book, how much is a premium, how much is a
everything.
AUM, and all these things. Everything is available, handy to me on the real-time basis. I can ask also on the Power BI that why it is like this and all these things. I don't have to go to the emails and write it separately to them. So we are on the same page, what I'm referring it to. And the thing is that automation has been done. And the thing is that this has helped me even in my GST and compliance, because the input tax credit is a big thing, to be very frank.
True.
Otherwise it's a loss. It means it's a, it's a loss to your, the bottom line, to be very frank.
Right.
If the GST is not being, what is it, deposited by the vendor,
Right.
then I won't be able to take a credit. So I really get,
True.
that what kind of, then I clearly tell them that I won't be able to pay you the bill minus what my GST, which you have not paid. So that has helped me totally my compliance. The fourth thing is that even the regulators now requires all my written filing and everything online. They don't want that I put an Excel sheets and then upload to their websites, So all that digitization has been done, then automatic from the system, the right numbers has been picked up on the forms which has been designed by the regulators, and all the automation goes like that, So these are the few things which we have done. On the contrary, my digitizations and everything has increased post corona. This COVID, we have realized that what is an importance of being more digital.
Okay, great. Would anybody like to add anything before we start taking questions from the audience?
Just one thought for the audience, and it's a leaf taken out of what Sid said earlier. Permit me, Sid. One should know exactly what one is looking at before identifying a technology. Don't use a cannon to kill a mosquito. So if your need is only of a basic level, use a technology of a basic level. Don't go in for a high-end technology. Otherwise, you just keep on not only spending your costs, but you are completely wasting away the efforts and the energies and resources of the organization.
Very true, very true.
So on that, if I may add, if you talk to any of the large or mid-size IT companies, you would see they're very, very inclined to work with foreign clients as opposed to Indian clients. And it's not just because of dollar or rupee. It's basically because Indian clients only want you to come and deploy because they think they know exactly what they want. While when you talk to a global client, they initially get into more of an advisory conversation before they actually deploy something. So in our case, I think it's mostly speed. Globally, I've seen it's mostly direction. Once they decide on the direction, then they put the speed. So it's that, that mindset shift, what Sandeep just alluded to, will help us a lot if we start to diagnose the problem, spend more time in the direction, and then put the speed.
Very true. Very true.
Absolutely.
Yeah. And never technology is for the sake of technology. Yes, that's true.
Yeah. I think maybe for a couple of, if I just may add one point on the newer areas of trends, particularly since you spoke about blockchain, I think there are a number of use cases which finance functions can evaluate in terms of blockchains, particularly intercompany kind of reconciliations and wherever you have waiting for confirmation from other groups. I think blockchain solutions can work very well. But yes, as you said, it's still evolving and there are challenges with the technology. But I think this definitely worth exploring and keep doing some smaller POCs to see how it works in your context, particularly if you have many such requirements where you have multiple entities or multiple divisions or multiple outside entities where you need to keep doing this on a constant basis or real-time basis. So maybe that's one. And of course, smart contracts, I'm sure Sid will have a better view on this. Smart contracts is another area where if you're able to look at that as an option, particularly if you have contracts which requires a lot of interpretation, and many of them have got clauses which are repeatable, which can be kind of used to where you can automate and then look at smart contracts as solutions. So those could be newer areas to look at apart from the traditional.
Right. So Sid, would you agree?
Totally. Only challenge I see, and again, Shakuntala, you know more about blockchain than most of us, I guess. But I think the regulatory aspect of blockchain also needs to be cleared before there will be, bigger adoption of it. I think we will have to.
Very true. Yeah. So in fact, I did a thesis on adoption of blockchain and supply chain financing. And one of the big things that came up was that regulatory is not where it should be. And because of the uncertainties around regulation, adoption is not yet at scale, besides the other problems as well. Okay, so shall we go to the questions? that some questions have come in from the audience even before we started this. So I'll pick up a couple of them, and then Manisha, you can tell me if something else has come in. So one of the questions was, what are some practical solutions to facilitate the integration between multiple systems in finance operations? Anyone?
Yeah, I can maybe take a stab at it, and then anyone else can join. So, see, I think what it's always a challenge. I think because in a finance function or in any business, you will have you would have built different systems at different points in time, and some of them would be already integrated with finance. Some of them would be information you're fetching offline and trying to input that into your larger financial systems. So I think the key is, again, not try to solve every single problem in one go. I think pick your critical problems. So don't try to solve everything in one go. It's never going to happen. So pick where your maximum data sources are and which are your critical data sources which are not integrated today, and look at what are the best ways to solve it. Because I think one of the panelists alluded to, I think there are APIs now, and I think those API solutions are much better than what it used to be. I think there are now microservices as well, which people can use to kind of fetch data from disparate systems and feed it into your primary ERP or financial system. So I think there are ways to do it, but I wouldn't necessarily take a very massive project to say I will kind of find ways of integrating every single thing which is disparate in the company and build it, try to fetch it into a central system. I would rather kind of prioritize, saying that which are the ones which are most important, most critical, take some time to get that in, and then look to do it progressively.
Okay. So Sandeep, you want to add something?
Yeah, just to add on this, Shakuntala, Pinky mentioned a very important aspect of singularity of data. Now that has very, very significant ramifications when you're talking of integrating various legacy systems into a new technology. The old legacy system technology may not even talk to the new technology at all. And the more and more you have data redundancy coming into picture, your information flow, your data analytics, everything could turn into garbage. So one solution which I normally give to my clients also when they are going into transformational exercises is that try to restrict the interplay between the legacy systems and the new systems, and only let them talk to an external interface, not to a direct interface. And that helps to a degree, not to 100% degree, but that helps them to remove the data redundancy, and one data would only reside in one place in a singularity form.
Right. And we can't really emphasize the need for proper data cleansing, data mapping, all this. Otherwise, it just becomes a big nightmare at the end of it. Yeah. Absolutely. Okay. Has anybody, Sandeep, among your clientele adopted this central finance of S4HANA?
Yeah, lots of them have, and most of them are struggling with it because we know.
Okay, data the issue, or what is the issue?
See, there are two kinds. Again, as I said, there is a challenge from the customer side, and there is a challenge from the vendor side. Customer side, the client side, the challenge is again the expectations versus the requirements. So you expect the move, but you do not know how to reach there. And from the vendors, the challenge is that they normally measure their output in terms of their recoveries which they are getting. Now, the quality of manpower deployed may not be adequate enough to meet the requirements of the client. And that's where the set of challenges start coming in.
Right.
More and more we are able to harmonize and collaborate between these two set of conflicting areas, the better the rollout and the configuration is.
Right. The other question which came in is, how can organizations ensure the security of sensitive financial data while implementing digital technology solutions? Anyone?
So I come from originally several years in the banking industry where data privacy is a very big issue. I mean, Sandeep or someone alluded to GDPR also during this conversation. But beyond that, because of compliance reasons, data is always a very big challenge for which initially, in fact, there was resistance to even put things on the cloud. I think data anonymization has been a big play, and almost all companies now have mastered the art of how to anonymize data when you send it out, because it has been well recognized that good analytics is not always possible to do in-house. So it has to go out, and then you do that and you bring it back to the system. So that's one way of mitigating that risk. The other which I have seen is, the general quality of security with cloud has really increased by leaps and bounds. So the comfort on that aspect has, in fact, people say that compared to your on-prem today, on the cloud, you're much more secure, because and the penetration testing, they win hands down most of the time.
Right.
While there would be some naysayers, but I think that has helped a lot in terms of dealing with it. But there is still going to be enough, incidents where people will feel reticent about it, because there are going to be data leakage and some data going out of the system because of this. And I don't think anybody has built up completely foolproof system here. But the risks are pretty much like when you fly. There will be very few leakage, but there are much more benefits. So you might as well adopt it.
True.
Yeah. And Shakuntala, just to add on to this, encryption will play a very, very important part in data privacy and data security going forward. And the risk and the rewards will also come in from this quantum computing, which is under development at a very rapid pace. So while quantum computing will help break the encryption of 128-bit or 256-bit to a very faster degree, but then higher levels of encryption will also be possible equally.
Right. Very true. I was actually talking to somebody, and they were also telling me that during COVID, when people started working from home, especially people dealing with sensitive financial data on their laptops at home, where you can't really control the environment that they're working in and the sensitivity. I asked them, what kind of technology do you actually use to monitor this? And they mentioned things like there was a company called TerraMind, which they used. They have this Avaya, they have recording, they have keystroke recording, they have monitoring people with a webcam, etc. So can any of you tell me what exactly you did if in this situation, if anything?
Well, I can share our experience on this. So what we did, we started using encrypted laptops with full security features blocked in, so no unauthorized access on any domain on the internet and things like those. So laptops duly configured, protected with the security protocols were couriered to the staff members. And that was the best way to deal with it at that point of time.
Okay.
But of course, other people would have done it differently, surely.
Yeah, so I think
generally the way.
Good. No, so limited extent, at least what we did, because at least prior to this company used to work for a listed entity, I think because teams used to work remotely on financials and obviously you need the security there. I think some of our DLP solutions are in place where people can't email it to personal email IDs, and then there are alerts which the system will trigger if you send it to non-standard or non-expected IDs. So those kind of controls.
Or you can't take a screenshot as an example.
You can't take a screenshot, but I think, see, some things you can't avoid. Like I can still take a phone and take a picture of it, right? So I think you still will need to be realistic with some of these things. But I think some of the controls from a system perspective, like if they're doing anything with the data or the email, which they're kind of downloading, saving locally or forwarding to other IDs, all of that can be monitored and measured and you can track. But beyond that, we also have to be realistic with some of these things, because it is an environment which is not completely in your control. I think the network and the other things you can, but somebody has got a phone, some of the device you still do, but you still have to trust your people as well. I think sometimes you have to, it's more than security, how much you trust your people.
True. And also it's how much you are willing to invade the privacy. Like people were talking about having a webcam or monitoring who's sitting in front of the thing. And, sometimes you take these things too far. So I guess it is trust at the end of the day. Right. Another question which has come in is, can you provide some examples of some tools that can help ensure accuracy in both the payables and the receivables side?
I think it is Casho, OneUp is there, QuickBooks, I think Sandeep can add to it, Xero and Wave. I think these are the tools I think which are, can help in accuracy in the accounts payable and receivable. That's what I understand.
Yeah, tools are enough and more, but as Sid was mentioning about the OCR experience, that also, is an extremely valid point. And I've seen it happening actually. And with digitalization, also comes that risk of complacency, that because we are using digitalization, we are using OCR, so everything is fine and hunky-dory. So, in the normal course, when mistakes would have been detected, they also go undetected. But tools are available. As I said, one will have to look at the specific requirement. What is the need was benefit arising out of it, and then go in for it. I would never recommend blindly going for an APAR, either a recording or a reconciliation solution, because it might just backfire on people.
Right.
And QuickBooks has shut down in India, unfortunately, so that's not an option anymore.
Okay.
Yeah.
Okay. Another question which came in is, how do you get, and I think Pinky, you actually answered this, about, it talks about how do you get well-planned dashboards which enable quick and effective business decisions in finance. So you were talking about your Power BI, right?
Yeah, Power BI. Then we can use a predictive analytics, which can assist in the business decisions and all. I think Power BI, Tableau is there. You can use any of them to,
I deployed this for a very large multinational, Shakuntala, and we needed almost 4 months of workshops across various, CFOs regionally, globally, business-wise, before you could come to a standard, format, because MI is such a complicated thing and almost everyone wants to see it their way. And then to Pinky's earlier point, single source of truth is another challenge. So, the tool is not the challenge here. I think to plan how to go about this.
Somebody wants it horizontally, somebody wants it vertically. I've passed it. I'm literally passed through all this.
And different colors, I'm sure, as well.
We look the dog as a dog only, donkey as a donkey only, whether it is vertically or whether it is horizontally.
Very true. Very true. Then, so yeah, one question which came is, what is the appetite of CFOs and CXOs to make investments in technology when everyone is ultimately focused on cost?
I think it is critical, and I think we don't have any other alternative, to be very frank. That technology and digitization in the finance function is the order of the day. The only thing is the thing is that don't start everything, in a big bang way, do it slowly, take the confidence of the team, make them understand what are the advantages, because the main fear is that they'll be losing their job when everything becomes digitization, but it's not the case. On the contrary, we have to prove it to them that they'll be able to go more faster in the organizations, once, adopt to such kind of the change, and, they will be away from all the mundane and the routine work. They'll be able to concentrate more time on the analysis and, the things instead of, making the data. I think the more time is requiring in, that what kind of, the informations will be able to, study from the data, because everybody is a large organizations working on the large data. Then I think how you analyze the data, how you take the corrective actions, how you take the timely decisions, which are more important for the management than, just preparing the data, I think running around that. So I think it's required. So, and there is no way out, to be very frank. You need to adopt. If you want to be ahead of the curve, you need to spend more. In fact, everybody has started, the organizations, if you speak to that, everybody has started, spending more on the digitization post-COVID. And what I understand, read last, that the digital spending even in India will reach to around $85 billion by FY 2026. That more and more people, having the digital spend has increased in India. to be very frank, across all the corporates, So there is no other way out. You have to do it, but you need to balance. You need to balance the cost benefit. You need to balance the mindset, the full culture, and
Right.
and the way you have the aspirations to grow the organization. The similar way the finance functions also needs to align to the grow and the in being line instead of being just.
Okay. So any final comments from you, Venkat?
Yeah, I think see there is always I think because many of us have worked for listed companies or continue to do, you've got this QSQD thing, right? One quarter se quarter tak. So if you're very focused on quarters, obviously some of these investments may not happen. Otherwise, if you need to take a medium-term view of some of these things, you will be able to make a case for investments, be it in finance or in the larger organization, because it's not just finance, right? I think finance is downstream most of the time. So if you don't have upstream systems adequately invested, the kind of quality of data you want to get is not going to be appropriate. So I think it has to be a medium-term view when you look at these kind of investments, and that's how you will make a case, and that's how the CEO or the larger management team will buy into those ideas. So that's the way to move forward. And as Pinky said, I think it's also a question of taking a measured approach, not trying to do too many things at the same time. Pick your priority and see how you can show business benefits, then buy-in happens automatically.
Right, fine. So any final comments from you, Sid?
I really appreciate the topic, and I think great to listen to all of you. And I think I took away a lot of inputs from this conversation, and I think India is poised for finance function to embrace technology in a much bigger way than what I thought at the beginning of the session.
Right. With so many CFOs here reiterating that. Sandeep, anything finally from you?
Yeah, again, taking off from Sid's comment just now made, I think finance and the CFOs are not being looked at bean counters anymore. They are not just bean counters. They are actually now being looked at as business partners, partnering in policy making, decision making, and bringing transformation and innovation to the business and not just to the finance function. And if they are expected to do that, technology will play a very key element in their entire strategy. Without technology, they would not be able to perform their role well.
That's true. That's true. So to wrap up, again, thank you all for a very, very interesting session. I learned a lot as well. And so we know that CFOs are really on the path to, leverage technology in their function, especially if it makes sense. So exciting times ahead. So Bikram, over to you to wrap up.
Thank you so much, Shakuntala, Sid, Pinky, Venkat, and Sandeep, for leading us through this very, very engaging and stimulating session. I mean, I was not expecting less than this, at least, and thank you so much to all our participants for being such an amazing audience. I'm sure you would have immensely benefited from all the deliberations which Shakuntala made happen, so in a wonderful way. We've tried to, I think, answer as many questions as possible within this time limit, but still, I believe there are some unanswered ones. We will be replying them over mail. If you have any more queries, do reach out to us at manisha.sachdeva@asa.in. Once again, thank you, all of you, for joining us today. Have a great week ahead. Thank you so much.
Thank you.
Thank you.
Thanks, everyone.